Hey, what's up, my friend? So, in today's video, we will be discussing about breakout trading secrets. So, here's the thing, right? And I'm sure many of you love to trade breakouts because when you enter on a breakout, the price could actually quickly move in your favor. So, it's like, boom, profits, right? Without, much time and effort on your part. But the downside to it is that sometimes, or rather, most of the times, you buy breakouts, the market does a 180-degree reversal and you get stopped out, and that is sucky. I know what you mean. So that's why in today's video, right, I want to share with you a few breakout trading tips, a few breakout trading secrets, right, to help you identify high probability breakout trades, so you know which one you should focus on and which are the ones to avoid like the plague. Sounds good? Then here's what I want you to do right now, right? Give me a thumbs up, right, and subscribe to my YouTube channel. The link is all below. Just click on the button. This way, whenever I publish a new training video, right, you'll always be updated. Sounds good? So do it right now, and then let's get started. So the first secret that I want to share with you is that when you trade breakouts, you want to avoid power moves. So what is a power move? So a power move occur, right, according to my definition, is that when the price moves too fast, too soon. Okay, usually when you see the price has moved too fast, too soon, that's usually the worst time to enter, because that's when the market is primed for a reversal. It's primed for a pullback. Okay, so, and also another thing to add on is that when you enter, when the market has already moved a lot, right, there are three things, right, that goes against you. Number one is that your stop loss is too wide, because you don't have a proper structure that you can lean across, right, to set your stop loss. So this would require you to set a larger stop loss, right? Just to put a proper stop loss, you need a larger stop loss, and I'll explain why later. I'll show it to you. Number two, once you have a larger stop loss, right, it would result in an unfavorable risk to reward. It's like, you need to risk so much, right, and your profit potential is only so little. And finally, as mentioned, right, it is prone to reversal. So let me explain, right, what I just shared. So you can see over here, okay, this is the chart of Euro Canadian. So for example, let's say, what is a power move, right? So first and foremost, I would call this a power move, right? The market moved too fast, too soon. This over here, let's see. This is another power move, right? Where the market moved too fast, too soon. So usually when you see a power move, right, you don't want to be chasing the markets because it's really, right, chances are it's too late to enter. And why is that? Is as explained, right? Let's say, for example, you look at the charts and you say, oh, wow, look at the charts, man. It's bearish. Look at the strong bullish bearish candles, right? Time to go short. But if you were to go short over here at this level, right, after you see the market has, collapsed so strongly, first question, where are you going to set your stop loss? Or rather, where is the logical place to put your stop loss? If you ask me, right, the bare minimum, right, it has to go at least above here. Because this is a market structure where price could become a previous support term resistance. So you want to give it some buffer, probably over here. That's one. So you can see that the distance of your stop loss, right, from here, assuming here's your entry, right, from here to here, your stop loss is very wide. This results in a poor risk to reward. So that's the second thing. The third thing is, as mentioned, right, when after the market has made such a huge move in one direction, it's usually primed for a reversal or even at least a pullback. And the worst thing about this is that it came into this market structure, which we will talk about later, right? Why you don't want to be trading breakouts into market structure. But anyway, chasing these markets, right, we had this swift reversal, right, that again, right, will lead to the market going against you, and you have to feel the pain, right? Even though when you think that, oh, this is such a high probability trade, when in fact, right, whenever you see a strong power move, it's usually a low probability trade. So here's another example. You can see strong power move. Okay, market breakout over here, strong power move. And again, let's say, you look at the charts, you were late to it and notice, oh wow, so bullish, right? Man, the price is going to break out of resistance. Time to get long. Then let me ask you, or ask yourself, where's the logical place to put your stop loss? Okay, so if you look at the charts, right, a logical place to put is at least below this swing low, maybe somewhere over here. And again, the distance from your entry to your stop loss, you can see that it's pretty darn wide. This, right, offers you a poor risk to reward on your trade. And finally, right, don't forget that, usually after a strong power move, I'm not saying that the market will definitely reverse, but more often than not, it would at least do a pullback or even reverse completely. So in this case, right, it reversed. Okay, so this is the first tip that I have for you. avoid strong power moves when you're trading breakout. So now you might be wondering, okay, Rayner, so how should I be trading breakouts? Well, that's what I'm going to share with you right now. Second thing is this: you want to be trading breakouts with a build-up. Now I know what you're thinking. What is a build-up, right? So for those of you who have been following me for a while now, you are probably familiar with that term. But for those of you who are new, right, a build-up, right, refers to a tight consolidation on your chart. So let me just help you with the visualization. Let's say the market is in a range, okay? Then over here you have this tight consolidation over here. This is where you notice that the range of the candles, it gets tighter and tighter, and this is what I call a build-up. So why is a build-up different, right, from trading a strong power move? Couple of reasons why. Number one, when you trade a build-up, notice right now your stop loss, it doesn't have to be very wide, because if the price breaks out above this area of resistance, where can you reference the market structure to set your stop loss? You can just refer to this this low over here, right? Maybe somewhere over here, somewhere about here, to set your stop loss. Compared to previously, right, if the market makes a huge move, you have to reference, right, this lows over here possibly to set your stop loss. So you can see that if you have a tight build up, right, you can now reference the swing low to set your stop loss. Again, you have a tighter stop loss, which result in the better risk to reward on your trade. Second thing, right, or rather third thing, depending how many good pointers I just shared earlier, right? Another thing to share is that when you have this build up over here, and if the market does breaks out, and let's say it's going to reverse, it's going to do a pullback, okay? Now, this over here, this market structure would serve as a floor to hold up these higher prices. That's not to say that the floor won't break down. It could break down, but at least you have a market structure that would help to support these higher prices. Okay, so you now have this floor over here that could hold these higher prices, which is again, right, is a plus for you as a breakout trader. So let me just share with you, right, what I mean by a build up, so you know how it looks like on the chart. So if you look at this, right, this is a build up at this area of resistance. Okay, you have this build up over here. Notice the range of the candles started to get smaller and smaller, right? The range is constricting. So even if you were to buy the highs, you buy the breakout on this candle, let's say that the market break and close here, okay? You can set your stop loss, right, just below this swing low, maybe possibly over here. So your stop loss now is not as wide compared to trading the power move that I just shared earlier. Okay, so this is what I mean by a build up, right? A tight consolidation, right, forming at the either resistance or support. And the logic, right, behind why this works is that when you see a build up at the highs of resistance, it's telling you that there are buyers willing to buy at these higher prices. So this is a sign of strength. Okay, and the build up, right, it's just one type of pattern, right? If you recall the slide earlier I shared, right, there are different variations to it. You have a higher lows into resistance or lower highs into support. That is another variation of a build up. And for those of you who are familiar with chart patterns, you know that this is basically an ascending triangle and this is a descending triangle. So let me just share with you how it looks like on a chart. So this is Bitcoin. Okay, this is a very good example of the build up with lower highs into support. So you see that Bitcoin, the range of the market, right, initially was very wild, right? Volatility is high. Then it started to get quiet, right? Notice the range of all these candles getting smaller and smaller. Okay, so this is another variation of the build up. You can see that this over here can be classified as a build up. And if you notice the big picture, right, you notice that there is lower highs coming into support. Okay, into support over here. So this is a sign of weakness, telling you that the sellers are just coming in to push the price down lower. So that's for the downside. For the upside, it's just the opposite. If you look at this, Bitcoin again, right, it's a very good example of using technical tools to read this market. What you have is higher lows into resistance. And again, notice this build up form over here. The range of the candles getting nice and tight. Okay, so this is a sign of strength, telling you that the buyers are willing to buy at these higher prices. So if you were to trade the breakout on Bitcoin, I would say the best possible entry would possibly be buying on the break of these highs with a stop order, a buy stop order. If again, right, you were to be buying using, let's say, waiting for the market to close, buying at these highs over here, this to me is simply, right, chasing the market, buying into a power move. And if as I've mentioned earlier, if you're to buy into a power move, right, it's not favorable for you because number one, your stop loss is wide. Number two, right, the market is possibly prone to a pullback or a reversal. And finally, right, there's a poor risk to reward for you on the trade. So in this case, right, I wouldn't even recommend wanting to buy, right, at this highs over here. Even though the market, yes, it went up further a little bit, right, you might make a little bit of money, right, but in the long run, right, this isn't a tactic, right, that I would recommend. Okay, so second tip I have for you is this, right, trade breakouts with a build up, right. It offers you a much more tighter stop loss, right, which improves your risk to reward on the trade. Third thing, not all breakouts are created equal. So you can have two charts, two identical looking charts, but one has a higher probability of success and one has a lower probability of success. And why is that? Is because not all breakouts are created equal. So just to illustrate what I mean, let's say, the market comes down lower, okay, then it consolidates like this, then let's say it breaks out over here, okay, something like that. This over here, right, when you buy this breakout, okay, let's say, you have all the typical build up that's formed, higher lows into resistance, but when you look left, right, you notice that there is market structure over here, right, that could act as selling pressure. So if you were to buy this breakout, right, shortly after, the market is going to come into this area of resistance, which is where potential selling pressure could exist. Okay, so this to me is not the best breakouts to trade. The best breakouts that you want to trade is where there is no opposing pressure coming in. So maybe the market just hit the steep decline, goes up, consolidates like this, okay, then it breaks out, then maybe at this level, right, this is where the next swing high is, the next resistance is where selling pressure could come in. So over here you can see that the profit potential is much larger compared to the illustration that I just shared with you earlier. So let me walk you through a few examples. So if you see this one over here, Euro Canadian. Okay, let's just go with this one, dollar against the Chinese yuan. Okay, so you can see over here, right, dollar against the Chinese yuan. So let's assume that, let's say, just imagine, right, hypothetically, like the market comes down lower, it forms a build up, right, and you remember that, hey, Rayner says, there's a build up, right, this is a high probability trade and I should go short. That's what Rayner said, right? But remember, the previous slide, I said that not all breakout trades are created equal, because you want to be aware of where you're trading into. Sometimes you're coming smack into a market structure like support, resistance, and that level, those area, is where opposing pressure exists, where they could, turn the tides and push the price against you. So for example, let's say this build up occurs and the market breaks down. Okay, you don't want to be necessarily shorting this market, because over here, as you've seen, right, this is an area of support. This is where buying pressure could exist. So if you're just, interested to get one swing, just one short move, right, okay, fair enough, you can trade the breakout and exit somewhere about here. But if you're looking to, trade this long term, to hold the move longer, then really you don't want to be shorting this breakdown over here, smack into this market structure, smack into this area of support. Why is that? Because support is an area where potential buying pressure could exist. Buyers could possibly come in and push the price up higher. So what could happen is the market comes down lower and then boom, reverse from there and get stopped out. Okay, so open your eyes, be aware of where you're trading your breakouts into. You don't want to be trading smack into market structure. So let me see if I can find another example. Pound New Zealand. Okay, so this one, another one. So you can see that now you have a pretty nice tight build up on this Pound New Zealand. Okay, but imagine this again. If you just look left, notice that here is an area of resistance. Okay, so if you're going to be buying this breakout smack into resistance, right, it's a breakout of this swing high, but it's coming straight into this area of resistance. Again, this is something that you want to be aware of, because that's where the market could possibly, right, reverse from. So really, if you really want to, stack the odds in your favor, you want to be buying breakouts, right, where there is no so-called obstacles in your way, where the traffic is clear, the highway is clear, you can just run 200 kilometers per hour, traffic is clear. You don't want to be, on a highway where there's so much traffic, you're going to get stopped, you're going to pause, right? Same thing here for trading. You want to have a clear path. Okay, so this is what I'm trying to bring across. You want to have a clear path when you're trading breakouts without any obstacles in your way. So that's the third thing to share with you, right? Not all breakouts are created equal, right? You want to be, again, right, be aware or avoid trading breakouts into market structure. And Lastly, right, the final thing is that the secret to trading explosive breakouts is that the market, it moves in a cycle, right? It moves from a period of, low volatility to high volatility and low volatility and vice versa. So what happens is that when you notice that the market went into a range for a long period of time, that is a strong signal telling you that this market is about to explode. Okay, so this is a clue, right? When the market goes into a range and is in a range for 6 months, a year or more, right? Tight range, you can imagine, right? This is where the market is about to make a huge move. So don't try to fade the move. Don't try to think that the move is fake and trade against it. No, usually when the market is sleeping for a long period of time, this is where the dragon is about to wake up and comes out the big fire breath. Okay, so another example to share with you. This case, I would say, yep, okay. Brent crude oil is a good example. 2014, not sure if you guys are trading during that period, right, where the market is just insane. It broke out of a consolidation. So you can see that this Brent crude oil within this period from here to here, this is a weekly chart, by the way. And again, if you look at price action, right, this should give you a clue that this market is about to break down lower. Again, lower highs into lower highs, right? Not exactly the most obvious, but you can see, right, naturally there's lower highs coming into this area of support. Okay, so it has been a range from since 2011 all the way the breakdown over here, which occurred at 2014, range for about 3 years. And when it broke down, oh boy, $104 all the way down to the lows of this one was the lows of I think about $28, $29. So you can see, right, the longer it range, the harder it breaks. So another example to share with you. Okay, let's have a look at another one. So this was the thing I'm trying to share right over here. The longer it range, the harder it breaks. Another one is dollar against the Mexican. Dollar against Mexican. Okay, so again, can you spot the range period? Again, it's here. This period, it ranged for about, I would say, a couple of years over here. Then it broke out. Boom. Okay, so again, this is a very long period where it went into range. And another tip to share with you is that when volatility is low, right, when you look at the range of the candles getting smaller and smaller, again, similar to the concept of the build-up I just shared earlier, this is where it's telling you also that the market is about to break out. Because no markets will be slipping. No market, will have low volatility forever. Usually, volatility is a cycle, up and down, up and down. So you can see over here, again, this is where volatility is pretty low, right? The range of the candles are relatively small. If you compare that to, the previous waves, right? Notice that, this range of candles is getting smaller and smaller. And when it break out, that's it, right? The market just exploded higher. And plus, given the fact that, it has been in the range for the last, I think, 2 years or more for this market. So you can see that multiple concepts that I just shared with you is all coming together now. And if you look closely, right? You even have a series of higher lows, right? If you look closely, series of higher lows coming into this area of resistance. So this resistance area is pretty wide. This one here, and there's this one here over here. But you can see that there are a few concepts, right, coming in together. And some concepts even contradict each other. Like, for example, I'm not afraid to share. So let's say you buy at the break of this over here, right, and that there's another area of resistance coming to market structure. So what do? So one thing that I want to point out is that trading is not an exact science. There will be times where you have conflict of analysis or information, and you have to decide as a trader which one would you give more priority as a weightage. So for me personally, right, since I know that this market is a low volatility environment, you have a higher lows and it has been in range for a long time, I might be inclined to just take this bet, take this trade, right, in anticipation that this level will be broken. Okay, so there's something just food for thought to let you know and to share with you. And I do have another example for you. Just one final example, shall we? So again, this one over here is a really powerful example. Euro Swiss franc. So I'm not sure if you are aware of what happened is that Euro Swiss franc, okay, in let me just zoom out a little bit. Okay, over here you might see this chart, right? You might think, hey, there's something wrong with the price data feed. No, nothing is wrong. It's perfectly fine. It's just that in when was this? This was 2015. Okay, so in 2014, 2015, right, the euro, you can see that this consolidation here, right, from 2012 onwards to about 2015 before the collapse, right, is that the euro, the ECB, right, pegged the euro against the dollar. I mean, the euro against the Swiss franc at 1.2. So this is why you notice that there is a floor over here, there's this invisible floor. Well, it's not invisible, it's quite obvious at 1.2. Right, the price at 1.2. It will never go below 1.2 because the ECB is supporting at that price level. Right, they're constantly buying the euros to make sure the euro don't break below 1.2. And one fine day in 2015, they said, you know what? It's enough. I'm stop buying it. I'm not going to buy euro anymore. I'm not going to support this currency against the Swiss franc. And then boom, it collapsed. So let's say, you and I, we both can't predict the fundamentals. Let's say, I can't even tell what I'm going to eat for lunch later, right? So, of course, we can't predict what the ECB is going to do. But looking at the price action, would that give you a clue to what could possibly happen? Well, sharing with the concepts that I just shared with you earlier, okay? Look at it, right? Let's share the first concept. The longer it range, the harder it breaks. How long has this been in a range? About 2 to 3 years, right? This whole thing is a damn range. Okay, so that's the first concept. Second concept, we talk about build up. Is there a build up form on euro Swiss franc? Yes, there is this build up form over here at this tight area, right? Around 1.2. Third thing, what's the third thing? Is there a, we have duration, we have build up. Yeah, we even have lower highs, okay? Lower highs coming into this area of support. So this should give you a strong clue that, that you don't want to be buying this market. Okay, many people bought this market and on hindsight, it looks easy to say all this, right? But let's assume that you didn't know this is going to happen, okay? If you just look at the price action structure, right, this should tell you that there is a sign of weakness in this market. Okay, and why, right? Why, you have such a huge move usually after the market has been ranging in a long period of time is because stop orders, it gets built up over time. So let me just illustrate to you, okay? The final point over here. So as the market is in a long range, right? Okay, you can be sure that traders, when they see this range, they'll look to, short the highs, right? Buy the lows, short the highs, buy the lows. And when you keep doing that, what happens is that, this traders will set their stop loss, right, just above the highs, just below the lows, right? If you're long, you put your stop loss below the lows. If you're short, you put your stop loss above the highs. Okay, and as the range gets longer and longer, this cluster of stop loss, right, it accumulates. And not only that, right, breakout traders who look at this chart, they'll say, oh man, right, this market, right, is about to break out. Let me, go with a buy stop order if the price breaks above this highs. Let me, short if the market breaks down. So can you see that when these two forces come together, when this, cluster of stop loss is above the highs, which is, in other words, right, if you think about this, a stop loss order for traders who is short, right, this over here above is a buy stop order. Okay, and traders who wanting to buy the breakout, what they do is they just have a buy stop order to buy the breakout. So this, you can imagine, right, the buy stop orders above resistance is so strong because there's just so much orders of people wanting to buy at a particular point in time. So when the price does eventually break out, it's usually pretty darn powerful. Okay, so this is one of the reasons why, right, the longer it range, right, the harder it breaks. Okay, so we have, covered quite a bit in today's lesson training. Let's do a quick recap, shall we? Number one, avoid buying, right, or shorting, right, after the market has made a power move because I shared with you many times, right, poor risk to reward, large stop loss, right, and market prone to pullback or reversal. Instead, you want to be trading breakouts with a build up. Ideally, tight consolidation, or it can be the form of higher lows into resistance or lower highs into support. Number three, avoid trading breakouts into market structure, right? So let's say you have a breakout trade, but you notice that this breakout, if you buy, is coming smack into another area of resistance. So this is something that you have to consider as well, right? You don't necessarily want to be trading that breakout. If there's two types of breakout, you want to be choosing the breakouts that have no traffic, no obstacles in your way. And finally, I spoke about, right, the longer it range, the harder it breaks. Okay, as just explained earlier, why the market usually, tends to make a big move after sleeping, right, for a long time. Okay, so with that said, right, if you want to learn more about, how I trade, my trading methodology and stuff like that, go down to my website over here, tradingwithrayner.com. I've got a couple of trading guides over here, but what is really relevant to what you've learned today is price action trading. So go over here, right, click this orange button, right, and I'll send you this free ultimate guide to price action trading. We'll go further in depth to what you've learned today. We'll talk about market structure, support resistance, candlestick patterns, and much more. Completely free. So just go down to my website right now, download it, right, and have a good read. And if you have any questions, feedback, right, let me know below. If you're still watching this video, hit the thumbs up if you've not done so, and subscribe to my YouTube channel. The link is all below the button. Click on it, and I'll talk to you soon.